Hey, how's it going? Nick here, back for another recording here. Something not good going on with the accounting, and Time reported on this. Says why the creative accounting in Microsoft LinkedIn deal is so disturbing, and I'm gonna talk about this, what they're doing, and I'm also gonna say why creative accounting is such a terrible term and why it should never be used because it's so deceptive in its meaning. And here we go. It says, it's a sign of a broader problem across corporate America. Finding examples of how companies use financial engineering instead of the real engineer to bolster their balance sheets is like shooting a fish in a barrel. The latest incentives of the biggest deal of the moment, Microsoft's acquisition of LinkedIn, where they spent billions of dollars to buy out LinkedIn. One of the reasons that LinkedIn, many have wanted to be acquired, is that they've been using a rather deceptive method of accounting that allows employee compensation to be paid in stock to be ignored as an expense, which, by the way, that is not an expense. That is reported in the stockholders' equity portion of the balance sheet, which doing so is not technically illegal, but it's definitely sketchy. And those are the words of my dad, who is an accountant for a living. I asked him about this, and that was his feedback on that. Says that makes for a bottom line that looks better than it really is. Yes, it does, because stockholders' equity is higher because it's not reduced by the number of shares that have been given out to employees, which is not a good thing for investors. LinkedIn isn't alone in this sort of crafty accounting. Most companies in the S&P now do it. Watch out, investors in the S&P. That's my own opinion. That you gotta be careful, because if they're inflating their stocks, how do you know how overinflated the stocks are? Because you don't know what your stock is really worth, because they're using this deceptive, horrible form of accounting. It says, but recently Facebook started including stock comp in its reporting, and there's a big push within corporate governance circles to get more companies to do it in order to get back to a more realistic version of earnings. After all, employee compensation, whether paid in cash or stock, is obviously an expense that should go on the balance sheet. It should go on the balance sheet. It needs to be there for the investors to know what the hell is going on. It's worth understanding why and how stock-based compensation became such a huge deal to begin with. It marked the turning point towards short-term decision-making in corporate America. Key legislative changes that fueled the trend happened under the Democratic president, Bill Clinton, whose administration passed a 1993 provision on corporate pay. The measure limited corporate tax deductions for regular salaried income to $1 million, but exempted performance-related pay above and beyond that. That was typically awarded in stock option. Joseph Stiglitz, a former head of Clinton's Council of Economic Advisors, remember this as one of the worst things the Clinton administration did, which I can agree with that. Also, you can add to that list of things that Clinton did that were not so good was NAFTA, but that's another topic for another day. It says that's because it created tremendous incentive for companies to pay more compensation and options. This further fed the cycle of short-termism, since executives would from then on be focused primarily on boosting stock prices by any means necessary. So this is Bill Clinton's fault, partly by incentivizing corporations to focus on their stocks. And it's also, it's just a bad thing. Like, seriously, to the accountants who work at these corporations, stop it. Stop it. This is wrong. And I'm just a student, but what you're doing is wrong. You need to stop doing this, and because you're screwing over the investors of the corporation that you work for. They put a lot into their investments. So some of these people put their livelihood on the line by investing. So stop it. That's all I have to say on this topic. Nick out. If you like this, like and subscribe. If you want to suggest a topic, leave that in the comments below. Thanks for listening. See ya.